The world has been rattled by an epoch-making crisis, which has caused significant harm, shuttered businesses, put livelihoods at risk, and protectionist reactions have cast doubts about the future of globalization. As we start rebuilding, we need to seize this opportunity to build a better tomorrow, one which achieves a more balanced, fair, and ultimately a more sustainable world. Globalization has helped raise living standards around the world in recent decades, and will continue to be vital for the future. Finance will continue to play a central role in international business. Making sure capital is available when needed will be crucial in shaping the global post-COVID economic recovery. Investors will provide the funds required to help companies around the world stimulate growth and create jobs. They will also help bring about the transition of our economies to a more sustainable future. Luxembourg will play its part. Our unique expertise in international finance connects investors with projects. Our ecosystem, our toolbox of investment vehicles, and our stability offer an ideal platform for financial services to operate on a worldwide scale. Luxembourg contributes to building a better, stronger, more open, and more sustainable tomorrow.
Welcome to Building Bridges, bringing together financial industry experts from different horizons, sharing and discussing their insights.
A warm welcome, ladies and gentlemen, to this new episode in our series Building Bridges, today dedicated to our friends in the American market. We will be covering a number of sectors and topics, in particular alternative investments, but also payments and the crypto space. And then, of course, also the most important trend for all of us, sustainable finance. Before we get there, obviously, a word about the importance of the American market for Luxembourg. In these very difficult times that we all live, friendships, alliances are what we have built our strength on, and Luxembourg certainly counts itself very firmly as an ally of the United States. We will never forget the sacrifice American boys and men did during the Second World War and indeed the First World War to come and liberate us. We wouldn't be here speaking English if it weren't for them. Only 2 weeks ago, we celebrated the landing in the Normandy. In Luxembourg, we very much also attach importance to the Battle of the Bulge, which was taking place in Luxembourg in part, and we have a very large dedicated US military cemetery in Luxembourg, which is, of course, as many of you will know, also famous for the burial site of one of America's finest military men, George S. Patton. Luxembourg, thus, is important in political terms as an ally to the United States, but obviously also in economic terms. If we look at how American players in the financial services field are active in Luxembourg, we have seen that not recently, but really over many decades, starting in the 70s, Luxembourg became a hub for American banks operating from Luxembourg throughout the entire European market. This continues to this day. All the major players are present in Luxembourg, in the banking sphere, but also in the asset management sphere. Of course, as you well know, many of the big names are here. Also, many of the less big names are here. In the payment sector, which we will also address, some of not only America's biggest, but also the world's biggest, such as PayPal and Amazon Pay, also operate out of Luxembourg. And that is why, for us, the American market is, of course, such an important market. We will address this with our experts from a number of firms. But before that, it is a particular honor for me to be welcoming to our studio here and discuss with His Excellency Ambassador Barret, the US ambassador to the Grand Duchy of Luxembourg. Ambassador, a very warm welcome to you.
Well, thank you very much. I'm honored to be here with you.
The ambassador has a bio that reflects very much also the incarnation of the American dream. If I'm correct, you have started out your professional life as a factory worker and a dockman, then decided to go back to study law, became a law clerk and then an attorney, before you decided to enter politics, and among different stints at the state level in Wisconsin, you also then became, from 1993 to 2003, a representative in the US Congress, and later on in 2004 you became mayor of your city, Milwaukee, which you have been for 18 years, which is quite an achievement. Obviously in Luxembourg, longevity in politics is also something that we can brag with. I think our mayor, if you combine her different terms, has been in office at least as long as that. But 18 years in politics, local politics, is something quite an achievement, if I may say so. And now you have become an ambassador to Luxembourg. Maybe, why don't you tell us how that came about, how you became an ambassador, and in particular to Luxembourg?
Well, I'd be delighted. Again, thank you so much for having me. I'm really honored to be here to talk to you about the relationship between our countries. My path really, as you noted, went through local government, state government, and federal government. So in many ways, my entire career, I've been a student of government, and I've been a student of relationships between people, and I've always found that fascinating. And during college, I had an opportunity to study for a short time at the United Nations. And even then, I thought, at some point in my career, I would love to do something internationally. The path I took, of course, took me a different direction. But when President Biden was elected, he offered me an opportunity to come serve him and the State Department in Luxembourg. And I have to say that I and my wife jumped at the opportunity. This is a tremendous honor for me professionally and personally. Ironically, it was just about a year ago when I got the call, and I wanted to call my wife. I was so excited to tell her. I could not call her when I got the call because she was at her retirement luncheon. She was a teacher and she was retiring. So her plans to spend the next 10 years gardening and fixing up our house, I completely threw out the window and said, well, instead, let's travel 4,000 miles and let's go to Luxembourg. But she eagerly joined me, and so we're here together. We're a team.
Very good. But there's also a garden at the residence that she could take care of if she
wants
really wants to do gardening. Now, while we talk about gardening, how about gardening and maintaining the relationship between our two peoples? And in particular, tell us a little bit how our American friends, what you have learned, how they view Luxembourg, and in particular its financial industry.
Well, I think the people in America have a very, very positive view of Luxembourg and the people here. And I think a lot of it is because we have so many shared values. If you look at our openness in government, our democracy, in the financial field, obviously a creative, progressive financial field, it's something that is admired in America. So I'd say that this is a friendship that is long-lasting. And my job is really to take this friendship that already exists and try to make it even stronger. So again, it's an exciting opportunity for me to be able to say, okay, how can we, particularly at a time when in the world there are so many splits and schisms, how can we take this solid relationship and make it even stronger?
Well, that is a very, very good question that I was actually going to ask you now, because we call this series Building Bridges. But obviously, as we all know, Luxembourg and the US have already very strong bridges. The question really is more how we can make them stronger in order to increase the traffic across these bridges.
Well,
what is your remit on this? What is your objective? What do you want to achieve during your term?
I love your analogy with bridges, because again, my most recent job was mayor, and we had a lot of bridges in our city, and so part of my job was to make sure the bridges continued to work, to keep them maintained, to make the bridges stronger, to allow more traffic. Exactly what you're saying is a great analogy as to what we need to do between the United States and Luxembourg. We have this bridge. The bridge exists. It's a strong bridge, but any bridge can be made stronger. And as you note, you want to have more traffic. You want to have more trade. You want to have more friendship. You want to have more communication. And I believe that the stronger that you can make the ties between our countries, that we can make the ties between our country, the more the people of Luxembourg benefit and more the people in the United States benefit. So the question then is, how do you do it? And I think in the financial area, one of the biggest surprises to me, quite honestly, was space. The investments that this country made in space. When I first was told this, I don't know if I even believed it. But when I got here and saw all of the investments that is going into space, into communications, into IT, sustainability, and we'll talk more about sustainability, I think those are opportunities that are just ripe for more investment. And so I see that as a very, very good indicator of even better things to come.
You as a mayor, because you were talking now about sustainability, as a mayor you were very active on sustainability projects. In this area alone, where do you see opportunities for the US and Luxembourg to work together to achieve the objectives that are so essential, if not even existential, for all of us?
Well, again, I see this as just an incredibly exciting opportunity, because as a mayor, you're in the trenches, you're at the ground level. It's a very gritty job. And so a lot of the environmental work you're doing is literally in backyards or in rivers. I think the place where Luxembourg has an incredibly attractive opening is in the area of financing. And it has already begun paving that bridge by making sure that people know and the world knows that if you're looking for the leader in sustainability financing, it's right here in Luxembourg. The fact that you've got the Green Stock Exchange. And I'm eager to try to learn more about that while I'm here and to take this information back to local governments, state governments, the federal government in the United States, so that we can build that tie even stronger, make that a stronger tie between our countries. So I think sustainability financing is very, very key to making sure that we're doing everything we can financially, but also, as you noted, for mankind, for our planet. It's an important, serious issue.
And another tie between our countries is, of course, peoples. That is where Luxembourg has a dire need of people who can actually help us support our growth, experts in the financial industry, many of them, of course, in the US, many of the American firms, as I said before, operate here. How can we make Luxembourg become a destination for American talent, American experts in Europe?
I think that the ingredients are already there. You just have to cook them. Because my experience, having been here now 4 months, is that this is a wonderfully livable country. And if you've got young kids, if you're interested in finance, this would be a great place for a person to have a career. Now, the challenge in Luxembourg, in the United States, throughout the world, is there's a big fight for talent right now, especially in areas like finance. So you've got to sell yourself. And I think that's a big part of it. And having ties with universities, I think exchange programs. I know we've got a strong program here with Miami University of Ohio. I think that's a strong program. But I think the more students in the United States know about Luxembourg, and if you get them here and they see it, I think that it's going to sell itself. I really think Luxembourg can sell itself if people see it.
Yeah, that is part of what our remit is, and we will definitely have to increase that if we want to attract more Americans to Luxembourg. Now, before we wrap this up, Ambassador, let me ask you one last question, but you already partially answered it with your remarks about space, but what else has really surprised you about Luxembourg since you have started to discover it a year ago with the phone call from President Biden?
I would say at a very personal level, it is extremely humbling to see how remarkably people know languages here in this country. It is unbelievable. As an American, to see people who are trilingual, might know 4 languages or 5 languages, that's something that we don't see in America, and that's incredibly impressive. So that was by far number one. The friendliness of the people. People are very, very warm. I think that has been something that doesn't surprise me, but something I've been pleased to see. So it's really been on a personal level, a very seamless transition for my wife and I. And my wife is happy. And when my wife is happy, that's a good thing.
That's definitely a very, very important criteria.
Yeah.
Ambassador, this has been a great pleasure. Thank you very much for joining us today. I hope we can continue this discussion on other occasions, and I really thank you and your team for the excellent cooperation. I look forward to continuing with you and with our American peers in working to strengthen this relationship and making the bridge stronger so that traffic can be increased. Thank you very much.
Thank you very much.
Thank you very much to Mr. Mackel and Ambassador Barret for that wonderful conversation. You definitely left us with a couple of thoughts that we will certainly pick up in the conversation to follow. I very much enjoyed it. My name is Robert White. I'm the market leader for EY here in Luxembourg, and I have the great pleasure of moderating today's session on alternatives in the EU, trends in private markets and the evolution of regulation. I think there's no shortage of things we can speak about here today. So today's environment provides us with a whole range of ammunition that we can delve into in relation to the alternative markets. Private assets have seen massive growth over the last number of years, but that growth has been enjoyed to varying extents by the different subsectors within alternatives. Private equity continues to enjoy the lion's share of capital being raised, which is not surprising if we consider it in the light of the whole movement towards sustainable finance. One could quite legitimately argue that private markets provide investors with more of an ability to participate in their investments. And if you view it through that lens, you can certainly understand the continued success of private equity. Debt funds have seen a massive emergence and are currently the fastest growing asset type amongst Luxembourg real estate funds. But it's a phenomenon that we can see globally. Real estate continues to hold its position in alternatives, but the success has been enjoyed to varying extents at the different asset class levels. Unsurprisingly, in these times, we've seen logistics boom, whilst we've seen retail struggle to some extent. But it continues to raise meaningful amounts of capital. And not surprisingly, we see infrastructure taking a significant place at the table. I always consider that private assets is a very strong reflection of how people live their lives. And I think if that statement is true, it's never more true than it is for infrastructure. And the disruptions that we've seen are having a very notable effect on what's happening in infrastructure. So we're going to delve through a couple of topics today. Inevitably, we will talk about growth. We'll also talk about technology. We'll talk about regulation and a wonderful topic that Ambassador Barret introduced, that of talent. I think the world has seen some very, very significant changes over the last couple of years, and I think it's very safe to say that the impact of those changes will be with us for some time. So without any further ado, let me introduce today's panelists. I'm delighted to be welcomed here today in the studio by Herbert Muck of Citibank, and we're joined virtually by Joanna Pecenik of Allen & Overy, and also by Abbas Suleiman of Invesco. You're all very, very welcome to join us here today, and thank you.
Thank you.
So let me maybe kick things off with a nice broad question, and Abbas, if you don't mind, I'll address this to you first. So the financial industry, it has been put under a significant amount of pressure during the pandemic. We've now seen additional challenges, including the conflict in the Ukraine, threatening increases of inflation, etc. What impact do you believe this will have on the alternative sector, short and medium term?
Thanks, Robert, for the intro, and hello, everyone. I mean, I think we are already seeing the impact through rising construction costs. It's impacting, development pipelines that we have. It's impacting the way how we make decisions as well in terms of new opportunities. And I think the new challenge that we have is rising interest rates as well. I mean, we've been fortunate to live in a very low interest rate environment. And now with rates creeping up, that's another consideration that we need to think about. And that being said, whilst there are these challenges, there are also opportunities that are created through this. So for example, to your opening point, we've raised a debt fund looking to try and capture that market with a strong ESG focus. We've also raised a distressed credit fund. And let's also not forget that with real estate in particular, it does act as an inflationary hedge as well. So there is that opportunity. The last point probably I'd like to raise in regards to Ukraine is it did create an opportunity for us as a business to really focus in and hone in on our ESG strategy, where we actively look to make available our assets within Poland, for instance, for refugees. So again, really amplifying the business's ESG strategy there as well.
No, thank you very much, Abbas. I think it's fair to say that some of the experiences recently have very much emboldened investors' appetites in certain areas. So, for example, you mentioned ESG, and I think it very much makes sense that the pandemic will, to some extent, informed investors' view on the products they would like to see designed and raised.
No, definitely 100% agree with you there.
Thanks. Joanna, could I maybe bring you in on that conversation to get your view, and perhaps particularly on credit funds, which Abbas mentions? Like, one could obviously see a very meaningful place for them in our financial industry.
Yeah, that's correct. Since the financial crisis, direct lenders across the continent have stepped in to supply the gap by banks. And it's fair to say that Europe, their direct lending took some time to get into that area, but now it has grown from a niche practice to a very large industry. I also wanted to stress that Luxembourg offers asset manager a broad range of products suitable for debt fund, and I think more or less 80% of the largest debt fund currently on the market have a fund vehicle domiciled in Luxembourg. That said, maybe there's one pitfall, which is that today there's no harmonized debt fund regime across Europe. But the LTIF regulatory regime, which is, we will see later, a regulatory regime for funds, allows cross-border lending, but it comes with a lot of constraints still. So
thank you very much, Joanna. Look, I think that's very interesting because obviously, ultimately, savers and investors are looking for solutions for their lives, and these strategies are potential sources of these solutions. So it certainly makes sense that we as an industry are focused on crafting these solutions, and hopefully we can hear a little bit more about that. Herbert, if I could turn to you and maybe get your unique perspectives on something. Of course, in the initial instance of the pandemic, we saw some reduction in the amount of capital being raised. I suppose there's obvious reasons for that. Initially, employers were focused on the well-being of their professionals. They then, of course, moved to business continuity issues. And, of course, once that had been addressed, people got back onto the market. And we have seen very significant amounts of capital being raised. In fact, in 2021, global PE reported the strongest results since the 80s, which is quite significant. Now, I always find if I'm trying to compare and contrast private markets versus public markets, you could, if you wanted to generalize, accuse private markets of being a little bit more nascent when it comes to technology, when it comes to service provision, etc. How are global banks such as yours gearing up to support the continued growth of the alternatives industry here in Luxembourg?
Thank you, Rob, for the question. I think it's very relevant here in that respect. The global banks, and mainly the US banks, I think were pioneer on this sector. So globally and historically, that they were really present to offer services to the asset managers and to the investment funds, whatever the private market on the tangible assets. Because they were a pioneer, I think they did very structuring choices on their operating model, on the substance they want to put, on the expertise they want to develop. And on top of that, they develop a kind of very global operating model to support such kind of growth. So today, I would say my first bunch of response will be yes, they are, and I think on the starting block, even if the pandemic pushed the, I would say, the pause button, but we are almost back to normal. And we are now seeing this big trend, which has been anticipated before the pandemic. I think the global banks are on the starting block for that. I would potentially add one point, which is also very important, is we see this trend not only for the pure player, the pure private equities, we see also this diversification effort that are doing the traditional asset managers. And it's also a good incentive for global banks like us to follow the movement and now even to propose solutions to be a bit looking forward.
Thank you very much, Herbert. And obviously, I suppose one of the trends that we all observe is that the big managers continue to get bigger. So I imagine with that, the pressure on providers such as yourselves to come up with new, innovative solutions and continue to support them with growth, it must be quite heavy.
Indeed. Indeed, and one of the element of response rely on the solutions we are building. And I think the digital aspects that on the market that we will potentially discuss later on is one of the key aspects of the solution.
Absolutely, and I'm sure talent is also top on your mind, and maybe we'll come to that in a little bit because I think it's a conversation of its own. Joanna, if you don't mind, I'd like to move to the AIF regulatory landscape in Europe. Now, of course, as you will know, Luxembourg was one of the first countries to transpose the AIFM directive in July 2013. It has been, I suppose it's fair to describe, a major success for the Luxembourg alternatives industry. Could you maybe talk us through what this directive effectively means for US managers seeking to establish funds and platforms here in Europe? Now, Joanna, I appreciate you're a lawyer, but the rest of us are not, so nice and slowly, please.
Okay, sure. I'll try to make it simple, although I expect most of the audience has already heard about AFMD. So the AFMD is the pan-European regulation which applies to investment fund managers and regulates the way they operate, manage, and market their funds throughout Europe. Many of the provision of the, if not most of them, of the AFMD applies to EU managers mainly, but some of them also to non-EU managers, such as some disclosure requirement, additional reporting. Those rules will, however, only apply if the non-EU manager either market the fund in Europe or manage an EU fund. Now, the main benefit of the AFMD has been the marketing passport, which basically allows funds funds approved in one member state to market to professional investors their fund throughout the EU. Unfortunately, that main benefit is not yet available to non-EU managers, which in practice means that if a US manager wants to market a fund in Europe, it has to either fall back to private placement rules, which of course are not harmonized at this stage throughout Europe, so it's jurisdiction by jurisdiction, or alternatively, it can either set up its own AFM in Europe, or can also use the services of the so-called third-party AFM, which are service provider, and then either delegate the portfolio management to an entity which belongs to the group of the US sponsor, or entrust the advisory services to such an entity. I also maybe wanted to stress that those rules have been recently supplemented by the so-called cross-border distribution directive, the purpose of which is mainly to harmonize and facilitate the cross-border marketing and distribution of alternative investment funds. And it has, amongst others, introduced a definition of pre-marketing, which should be distinguished from marketing activity. And the main benefit of that is that pre-marketing activities, in order to conduct them, you don't need to go through the registration process with the with the regulator in Europe. You just need to inform the regulator. That said, those rules again are not do not apply to non-EU managers. So it's on a case-by-case basis, and in each jurisdiction it can be different. Either in order to pre-market the fund, you need to register under the private placement rules, or you need to follow the same rules as EU managers.
Thank you very much, Joanna. You know, I always think in the development of regulation, one always has to consider the carrot and the stick. I think it's a fair statement that effectively with this directive, it offers the ability to put European capital on tap for managers that have legitimate intentions of raising capital in Europe for private markets in a meaningful way. So without doubt, it has been quite a success. At least that would be my view. But Abbas, if I could turn to you, and of course, Invesco is very much a household name. What has been your experience with this directive and how it has informed your suite of products here in Luxembourg?
Yeah, I mean, in Luxembourg, we have a very, very broad suite of product offerings covering the full risk spectrum and also asset classes as well, and more recently, debt. So that can literally only be done through the evolution of AFMD. But the one thing I think it's also worth mentioning is that whilst we're looking at it from a capital raising perspective, also from a structuring perspective, the ability to passport that manager within the EU enables sort of on the real estate side to hold investments through local regulated investment structures, which have their own benefits, but by virtue of having that flexibility, creates a competitive advantage in order to do that.
Thank you very much. And of course, everything we've just discussed pertaining to the AFM directive is effectively the body of regulation that sits at the level of the manager, but there is of course regulation that sits at the level of the product. And one of the things that we're all quite proud of here in Luxembourg is our product toolkit. Could I maybe invite you, Joanna, to offer a few words on that topic? I appreciate that many of our listeners today will be considering this from a variety of positions, different types of strategies, different pools of capital, different needs, and they will want some comfort that there's a suitably sophisticated product toolkit to meet their objectives.
Yeah, the good news is that this is very much the case, and in Luxembourg there are a range of products which go from unregulated structure with also a hybrid structure, so they are subject to a certain regulatory regime and impose certain rules such as diversification, for example, but they are not subject to the regulatory scrutiny of the CSSF, which is the regulatory authority in Luxembourg. But we also have, for those investors who need more supervision, funds which are regulated and subject to the regulatory supervision. Just to name a few of them, so the CIF regime is a regulated one, the CICAR regime, the RIFE is the hybrid regime we have, so not regulated, but still, subject to regulation, but not under the supervision of the regulatory authority. So there is room to accommodate any type of investor constraints, any type of assets constraints. So it's a very rich toolbox.
No, thank you very much. I'm sure that'll be of some comfort. Now, if we speak about regulatory change, because of course regulation has a tendency to change, recently there has been a regulatory proposal containing amendments to the AIFM directive. I think from many's perspective, this directive has been a success. So one would expect that the changes would be relatively modest. Joanna, could you offer a few words about that? What changes might we expect in this new round?
Sure. So maybe first of all, and just to manage expectation, there is still no mention of the benefit of the marketing passport for non-EU manager, unfortunately. The draft directive has proposed a number of changes to the AFMD, including on delegation, loan origination, liquidity risk management, reporting, and on the depository. The key takeaways, I would say, would be on delegation and additional substance requirement, just to ensure that EU manager retain people with the right expertise on the ground here in Europe, and to avoid them becoming a letterbox entity. The other one worth mentioning is probably the new rules for loan originating funds. And in that respect, there are numerous proposals, such as that AFM managing the AIF granting loans will be required to implement very specific policies, procedures, and processes for granting loans that will also need to be reviewed periodically. So there is additional sort of safety nets for investors and expected from managers who will be involved in those type of strategies.
Thank you very much, Joanna. Now, obviously, Abbas, if I could maybe turn to you, the development of regulation is one thing, but often the implementation of that regulation is quite a different thing. As you look at this change from the perspective of Invesco, how are you anticipating the implementation, or have you any thoughts on that matter?
I guess I'll have to engage Joanna here as well, given that large shopping list. But jokes aside, well, we have a working group looking at this. I think in particular on the point around delegation, we don't delegate our portfolio management or risk management. We keep everything in-house. So I think certain elements may not necessarily impact us, but nevertheless, it's something that we as a business are spending quite a bit of time looking at.
Thank you very much. I'd like to move on to another topic, and one which is very much universal today. It's the topic of talent, attraction and retention. We've discussed a variety of themes. We've talked about regulation, we've talked about technology, etc., etc. But ultimately, for any organisation, your success will to some extent be dictated by your ability to attract and retain clever people and encourage them to do clever things. And that is definitely, the financial services industry is no exception. Abbas, if I could maybe bring you in on that conversation, what challenges has your organisation encountered in relation to talent markets recently in this, let's call it, post-pandemic era? And what are your views on how they can be addressed?
I think the pandemic sort of enabled people to reflect. So I've come across friends and colleagues who have had career changes, different directions to travel in. But nevertheless, I think we as a business, we need to focus on retaining people. We do that either, ensuring that they're motivated, they enjoy the work that they do. I think we as a business have to accept the fact that people want to work flexibly now as well. So you have to accommodate that. I think going forward that there is a scarcity of good talent. Even when you find it, it takes time to invest and bring that talent or develop that talent within the business. I think it's going to be challenging, but it's just, again, a space that we have to continuously watch and monitor for now.
No, thank you very much. And maybe if I could bring you in on that conversation then, Herbert. So for the second year consecutively, Luxembourg has been ranked, I see, as the third most attractive country for talent globally. How does this ranking, in your view, reconcile with practical experiences of employers such as yours here in Luxembourg?
It's a very interesting question, and I think we got a very good transition from the ambassador. Most of the people are coming to Luxembourg and used to stay, so it means it's proving that the situation in the country is very welcoming foreigners and we have a good experience. But reconciling this point, this statement with the heredity of the asset management, the asset servicing and something else, in all honesty, it's still a very huge challenge. So attracting the talents, keeping them, retaining them is still a big issue. And where I join Abbas on this statement is that the pandemic pushed the people to come back to more essential, fundamental values. And now what we need to pay attention when we pitch the new joiners and also the new generation is to make sure that there is a convergence between their belief, their convictions, and the conviction of the company. So this is where today we have a huge efforts to perform because it evolved very fast during the pandemic. But I think we are doing better and doing good. And on top of that, we take, and supported by the Luxembourgish government, a lot of initiatives to promote Luxembourg within and outside the frontiers with different universities, with different type of large companies to make that promotion. And I would say that it's really working well because it's slowly giving the first positive input. Now, I would say that there's something else we need to take into consideration, more the digital aspects in this recruitment phase and this attractiveness of the talents. Now, the pandemic killed all the frontiers. They used to travel to work from everywhere at every moment. It's an opportunity because we are now addressing and reaching more experts, more talents around the world, but it's also becoming more virtual, and we need to deal with this new reality. And this is where coming back to the basics and to the value may make the difference.
No, that makes a lot of sense, and I certainly recognise the point you're making in that Luxembourg doesn't enjoy the captive pool of talent that perhaps London, Frankfurt, and New York can enjoy. So
Indeed.
There's definitely a need to be innovative and proactive on the talent front, which is maybe no bad thing because I think a lot of quality ideas are born out of that. Sticking on a similar topic, so in the wake of Brexit, there was the phenomenon of many asset managers, be they traditional or alternative, migrating certain elements of their apparatus or their product ranges to Luxembourg. And to some extent, this supported Luxembourg in cultivating additional middle and even front office capabilities. What do you think is necessary for us to encourage this trend to continue?
I think if you look at what Luxembourg has today, so they have the expertise, they have the experience, which is very important. We cover almost all the product, like you said, like Abbas said. So we got the product, we got the managers, we got the expertise on fund administration, on TA, on custody. Maybe we need to develop more on the investment relationship. I think this is more important, and the new regulation that Joanna was mentioning is a very good example, so facilitating the marketing and trying also to push and to promote the promotion of that fund. Luxembourg is the second largest domicile for funds worldwide, so I think it's already a very good foundation to keep growing. The other point as well, when we need to take also consideration, is the continuous willingness to improve the operating model for the asset services and the asset managers, especially more on the alternative markets. This market is gaining in maturity for sure. I think it's obvious. And we need to follow the same trend of the traditional, so try to operate in a more efficient way, try to support the constraints in cost, try to support in a better way the moving regulations. So we still have a good margin of progression in that field, I guess.
Thank you very much. If I could move on to a slightly different topic, so innovation, virtual assets, blockchain, NFTs. Of course, innovation is very much to the heart of the alternatives industry. And Joanna, if I could turn to you maybe for quite a specific question. Of course, here in Luxembourg, a quite renowned AIF has successfully tokenized a private debt portfolio, and the CSSF has issued guidelines expressly allowing Luxembourg AIFs to invest in virtual assets. What are the requirements for an AIF to invest in virtual assets, and what are the main regulatory changes to bear in mind for asset managers with direct exposure to digital assets?
Yeah, so as you mentioned, crypto assets is positioning itself as a new class of assets, which also will come along with an additional layer of regulation. And you're right, the CSSF has issued recently some guidance on virtual assets. It was just a sort of press release. And it was complemented by an FAQ on virtual assets for different type of funds. And in a nutshell, the rules are basically the entities supervised by the CSSF would be required to conduct a robust due diligence and to assess all the related risk to this class of assets, such as volatility, liquidity, technology risk. In addition, there will be a requirement to develop and implement a sustainable business model, considering all those risks specific to this class of assets. The CSSF has also recommended fund managers to follow closely the regulatory development, which are expected to increase within the next years. They should, in particular, consider the upcoming regulation of the European market in crypto assets regulation. And also the FAQ has clarified that virtual assets are suitable, but only for professional investors, not for retail investors. And funds which use this class of assets should be funds which are managed by an authorized alternative investment manager.
Thank you very much.
That manager also will need to seek a specific authorization to manage funds investing in this type of assets.
Thank you very much. And Herbert, if I could turn to you on a linked topic of digital asset infrastructure providers. Of course, you know, we see banks increasingly playing an active role in the crypto sector, but of course they're doing some with some degree of caution, as you would expect, and that makes perfect sense. How important, in your view, is the role of digital asset infrastructure providers in bridging this gap?
I think the answer is already in your question. So really, if we take an assumption that the crypto is like a diamond with the investors, the regulator, the banks, and the infrastructures, I would say that this age on the infrastructure is potentially the most influencing one to make the thing moving forward. They help banks like us to really think about the operating model, rethinking about our governance and process, and changing the mind and the usual traditional approach on risk management. So, and I think they're also potentially coming on the market for the investor, but also for the regulator to explain the new way of doing the business. So in that respect, I'm really considering them like a facilitator and even potentially an accelerator. So that's why banks like us are really involved in innovation, in discussion with infrastructures, here in Luxembourg with the Loft or even outside, but we try really here to capture the technology to accelerate the change within our own organization.
No, and that makes perfect sense. Thank you very much. And staying on a linked topic, of course, the EU has and continues to have a desire to democratize investments in alternative assets and open up these strategies for retail investors in a safe way. It's a desire that has not yet been fully achieved, if we're being perfectly open and transparent. But of course, the LTIF regime is one of the instruments that was hoped to make some progress in that regard. And we appreciate that that particular regime is now under review also. Joanna, could I maybe turn to you to introduce the LTIF regime to us and talk a little bit about what would be required of that regime to allow it to achieve the objectives that the EU have set for it?
Sure. So the LTIF regime has been introduced back in 2016, and it's now the most efficient way to market a fund to retail investors on a pan-European basis. As I mentioned earlier, the LTIF unfortunately comes with a lot of investment restriction and a quite cumbersome regulatory regime. That said, there will be a reform of that regime and to, amongst others, facilitate the use of that vehicle for retail investors. So all the rules which are protective of retail investors will be relaxed at this stage. So hopefully this will facilitate distribution to retail investors, which is another hot topic in Europe right now.
No, thank you very much. And I like to believe that the LTIF review has been a very good example of regulators listening to the industry, because, you know, we can certainly see the various changes that have been tabled very much respond to what were perceived inadequacies in the original draft. Things around co-investments, things around use of leverage, you know, things that are very much the bread and butter of alternatives. So on reading it, I was quite hopeful of things to come. And it certainly shows that certain industry bodies are certainly doing their job and making sure that the voice of the industry is being heard. This has been a wonderful conversation. We could continue for quite some time because there's a whole range of topics I would love to discuss more. But if I could maybe just ask one final question of each of you, and not to put you on the spot, but imagining the four of us are back here next year. What, in your view, will we be speaking about? So maybe a little bit of a prediction from each of you. Abbas, if I could start with you, what do you predict us speaking about this time next year?
I think ESG. A greater focus on ESG.
Safe bet. Herbert?
I'm free with Abbas. I think it will be ESG for sure.
Very good. And Joanna, I'd like to push you for a different answer if I could.
Yeah, definitely. I think, as I mentioned earlier, retail investors are increasingly a target, and there are already a number of options to market a fund to retail investors right now, at which fund manager are looking at, and I think this is going to grow within the next years until we have the revised LTIF regime.
Excellent. Thank you very, very much for your time here today. I always find when I attend these conferences, I take the objective of learning at least one thing, and Ambassador Barret certainly helped me with that today. My objective going forward, and I would recommend it to everybody, make every effort to keep your husband or wife happy. So with that, I would close, but thank you very much for joining us.
Thank you very much, Robert Wright, for this very interesting panel on alternative investment fund. Welcome, everyone, on this new interview. I'm Solenne Niedercorn. I'm a non-executive director in the financial industry and a board member at Fabric Ventures, a VC investing in Web3 and the open economy. I'm here today with Karen O'Sullivan to talk about the payments and crypto landscape prior to the implementation of the European regulation called MiCAR. Karen, you're the head of the CSSF Innovation, Payments, Market Infrastructure and Governance Department at the CSSF, which is the financial regulator in Luxembourg. Thank you very much for this opportunity that we have to get your insights on all these subjects. Prior to this interview, let me give a bit of details about Luxembourg and the link with payments and fintech. I wanted to mention, maybe it's been already mentioned during the former interviews, that Luxembourg has become, over the years, a payment hub in Europe. We have seen the creation of electronic money institutions and payment institutions such as Amazon Pay, eBay, Airbnb payments, or even Bitstamp. And not a lot of people know about this. First question to you, Karen. How did Luxembourg become such a payment hub?
So good morning and thank you very much. I think part of it is our own doing and part of it was just passive events, if you like. The first payment directive, European Payment Directive, dated back to 2009. And I think at that stage, Luxembourg and the CSSF were very proactive in trying to transpose the rules into our own regulation, and very open and interacting with the market to try and see how or what kind of framework needed to be put in place. So we were ready very quickly to have our first licenses in place. On the other side, I think Luxembourg as a country has, since the 1980s at least, shown how good it is in cross-border relationships and in cross-border dealings. And I think that also helped us to attract, and I think the companies you mentioned a few minutes ago are all global players, and I think that helped attract us to the centre of Europe, a lot of the larger players who then, from their base in Luxembourg, target the European markets. So I think it was the two pieces together that worked, which creates the hub that we have today. I think we don't, I mean, numbers-wise, if you look at our registers, we don't have loads and loads of entities. I think roughly we have about 21 licensed payment or e-money institutions today. But I think what's really important is to look at the global, or at least the European reach, and the volumes of those companies rather than the number of companies themselves.
Thank you. Yes, as you said, the Grand Duchy has been, for years, a financial center. It started with foreign exchange, then private banking, investment funds, payments. And since years now, a few years, we have seen the creation of virtual asset service provider here in Luxembourg, putting in place their activities in Luxembourg or just registration from another country. Can you explain to us why VASP are deploying these activities in Luxembourg and how does it practically work with the CSSF?
Okay, so I think the regime for VASP, it comes really, or it stems from the GAFI recommendations around virtual assets. And there the recommendation was for the different jurisdictions to put in place some form of supervision, particularly around AML aspects linked to the VASP, with either the service providers or the assets themselves. In Luxembourg, what we decided to do is put in place a registration process, which means that any entity, whether it's established in Luxembourg or is actively providing its services in Luxembourg, has to be registered with us in order to provide those virtual asset services. And I suppose that's why there's the different reach. There's no passporting currently under the regime, which means that it's really a domestic by domestic registration or license that's required. The way we've set up ourselves so that there is the registration process, there's a certain amount of information that the different entities need to provide us, that we need to go through, and our focus is really on anything that's AML related. And then that's what our post-registration supervision covers as well, is anything that's AML registration or AML related. I think what's important though is that a VASP is a regime, a type of entity or a name that's given to a type of entity, which means that the registration is required, but that registration is required regardless of whether the entity itself has any other license. So for instance, if you look at our register today, there are 7 VASP that we have registered, 5 of which are Luxembourg-based entities, and all 5 of them hold already another license for the financial sector. There's 2 other entities that are licensed, or registered, which are not licensed. They're not Luxembourg entities. They're foreign entities, European, but foreign entities who are actively targeting the Luxembourg market, hence their registration.
Thank you. One element that I wanted to clarify with you is the way the CSSF is equipped internally and the different profiles that you had been, that you had to recruit internally to be able to properly handle those files.
So I think given the nature of the business and the activities, we have our innovation team, and we had our team that was responsible for the authorization supervision of payment and e-money institutions. So given not the closeness, if you like, in some of the activities and the interactions between them, it was decided that the new competence for the registration supervision of the VASP was put in the same department. So within our department, we have an AML team, so AML experts who look after, or before VASP at least, the AML aspects for payment in e-money institutions. And we've extended that team to include AML VASP experts, so that's people who are AML background, if you like, an AML profile, with an expertise or a growing expertise on the virtual assets and the specificities that are linked to the virtual assets. And so it's at the base, it's really more of an AML team, and that's really because under the current regime, the registration and the supervision is all around the AML framework that the different companies need to put in place.
Thank you. So now let's talk about MICA. So MICA is a regulation. It's been introduced in 2020, and it provides a legal framework for crypto assets market. I just want to clarify and mention that it's not a directive. Directives has to be transposed in all the different member states. It's a regulation, meaning that it has to be implemented from day one. Can you explain to the audience what is Mackel, what it covers, and why it's needed?
Okay, so maybe firstly, it is part of, so it's a European initiative, and it's part of the European Digital Package, which itself was published in September 2020. The discussions at the European level are still ongoing, so the final text has not yet been approved or voted on, so it's still in the negotiation phase. And then once the text has been finalised and voted on, well then, as you said, it'll become directly applicable in a harmonised fashion across all EU member states, without, as you said, any of the national transposition being required. So what is it? It's really a framework that's been put in place to, on the one hand, to encourage the market to reap the benefits from the innovation that's there from the virtual assets, so to really be able to grow the industry, the European industry, on the assets, but at the same time, by putting in place a regulatory framework, it's also to reinforce or to protect consumer protection, so to make sure it's the consumer's needs are taken into account, they're being properly protected. It's there to help develop or strengthen market stability, financial stability, because prior to MiCA, or even at the moment, there's lots of, we say, private type coins, virtual assets, which could, one way or another, have a dramatic or detrimental effect on the financial stability. So the idea of the package is that by putting in place this overall framework, it will help the robustness of the financial stability of the market, and at the same time, it'll unify or harmonise the market, which will, in a certain respect, give the European market a certain competitive advantage, in that today, any of the companies, for instance, that are registered with us today need to go and do a registration or equivalent country by country, so there's no harmonised regime in place. So any company who wants to, we say, passport or to provide its services across Europe has to go regulator by regulator, country by country, to see what's needed, any specific local requirements that need to be taken into account. Whereas with MiCA, it's going to provide a harmonised regime for the whole of Europe, so there won't be any national differences, if you like. Plus, the advantage is that it'll give a passport. So in the same way as the traditional markets and the traditional licenses and frameworks in place have their associated passport, under MiCA there will also be a passport. So an entity, for instance, established in Luxembourg, under MiCA, conforming with the rules and respecting all the requirements, will then be able to passport and notify and passport its activities across the other European markets. So that's really what it is. It was needed really to give the harmonisation across Europe to help protect or the competitive advantage, if you like, of the European market, but also to ensure that consumers were able to avail of the opportunities that these new assets can afford them, all the while protecting them as best we can. I mean, I think today when we look, I mean, it doesn't take long to open the press and see a new scam, a new fraud. Crypto assets being used for illicit activities, to move money all over the world, to finance terrorism. So there's the negative side of the assets, and I think the framework is there to really counterbalance those negative aspects, to really enable the public at large to reap the benefits that the assets can provide.
And if we maybe go into more details, what kind of crypto asset service providers are concerned? Because there are a lot of different service providers.
So I think under the proposed regulation, it's really a lot of the services around the assets. So there's two aspects. There's the issuer of the crypto assets will be captured, and then those who provide services. So services can be things like investment services, safekeeping services, transfer, so exchange services, the administration of the keys. So it's really, if you think in the traditional, say, MiFID world, so anything around the investment or everything around the active, and you put it into a virtual world, that's essentially what will be captured as the crypto asset service providers, with the addition, if you like, of anything that's custody, safekeeping, administration related, and of course the exchange platforms, be it virtual to virtual exchange or virtual to fiat exchange.
Excellent. Another element that is quite tricky in this crypto asset world is the multitude of tokens. there are multitudes of tokens with different rights, different purposes. We talk about NFTs, we talk about ICO, so it's very diverse. What crypto assets will be concerned with this regime?
So I think first and foremost, there is a definition of crypto assets within the regulation, which should help. But it's always finding the balance. It's sufficiently, we'll say, rigid so that you can have criteria to assess, do I fall in the scope or not? But at the same time, because of the rapidity in the evolution of the different assets at the moment and the tweaking of features to maybe fall one side or the other, the definition remains relatively large. So it's not an exhaustive list of anything that is captured. It says that it's a digital representation of a value that essentially is used for payment or investment purposes. Okay, and that's when you look at the definition with the different exemptions. The primary idea wasn't necessarily to define crypto assets and what was in scope. It was more to say we have a current framework in the financial market for financial instruments. Today, anything that's not a financial instrument is out of scope of any regulation. So the idea of MiCA really was to say, okay, well, anything that's out of that scope, we'll put into MiCA. But today there's still ongoing discussions, particularly about NFTs and whether they're in or out of scope, what features of them would make them in or out of scope. So that hasn't quite been clarified in the text yet. But I think just on a general basis, it's crypto assets that are not financial instruments are essentially those that will form or will fall within the framework.
Excellent. Thank you. You were talking about passported activities. So we have the chance in Europe to have a license that can be passported and enabling those service providers to have a free provision of services across Europe and not necessarily opening branches in the different countries. So we have currently in different European countries players that have registered themselves with each of the regulators. What will be the impact for these service providers?
So I suppose to a certain extent there'll be a rationalization of those registrations, because if you take a company today that's registered, for argument's sake, with five different regulators, once the regulation is in place and they fall within the regulation, well then, as you said, it's one license that be required and then it can be passported. So it should simplify the administrative burden for the companies. There will be rules to a certain extent as to how to determine what's the main country or what is the home country, if you like, that needs to be decided upon, and then which are the other host countries where the services will be passported. I think once the regulation is in place, so assuming you have a company today that has possibly a license and then different registrations, it will be required firstly to elect the home country and say, okay, that's where I will need to obtain my CASP, my crypto asset service provider license. We'll need to go through the administrative process with that regulator, then the notification, and then remove or deregister on the other countries. For the moment, there is nothing, like no, say, mechanism or procedure has been actually written and put into place to detail how exactly all those steps will have to, will be lined up. But essentially, it should simplify the amount of registration type processes that would need to be undertaken.
Okay, and when we talk about Luxembourg, what is currently the Luxembourg market practice in that area, and how do you see the implementation of MiCA in Luxembourg?
So I think today, what we see is, as we said, we have our different VASP that are registered. We have other VASP files that are under revision. So for the moment, any entity that is looking to provide one of the 5 VASP services, which is a subset, if you like, of the CASP services that we will see in the future. So today, anybody who's looking to actively provide those needs to continue to go through the registration process. We also have other projects, if you like, that's saying, well, for instance, investment advice in crypto assets. Does it fall within an investment firm today? Is it outside an investment firm? So there's a lot of discussion to see people who are already looking to provide those services, how and if they can already be provided, and if any form of authorization is required, which would need to be followed. I think going forward, again, there's different companies that are saying, okay, this is my idea, this is my project. Today, MiCA isn't there, so it doesn't really fall into the framework. And to see, well, is it something that can wait until MiCA can come into place and then you have the full benefit of the passporting and whatever else? Or is it something that I want to start doing now with the regime that exists, knowing that in maybe 18 months to 2 years' time, then I need to transfer it across into MiCA compliant. I think in MiCA itself, there is a transitionary regime. So any kind of a form of grandfathering, if you like. So anybody or any company that's providing the MiCA services before it comes into place, and having obtained the appropriate registration requirement or authorization, then should be able to have a certain length of time to conform with any differences or new requirements that would come in with MiCA afterwards.
Okay, so another interesting question that everyone has is to have the right balance between regulation and business, meaning that we need to have, of course, an efficient regulation to protect investors and particularly retail investors. But in the meantime, we want to give Europe as much chance as possible to promote businesses in that area. So what choices have been made in the EU to keep that right balance?
So I mean, there is the discussion, and I think the choices that have been made is what we will find ultimately in the wording of the regulation that will be published. And I think it was really trying to put in place a regime that will enable people to have exposure to the assets, enable people to have exposure to providing services, so growing their business, providing different returns on investment to investors, but at the same time, a regime that's sufficiently robust to avoid, as far as any regime can, any of the illicit activities or any misuse, if you like, of the assets. And it's really around AML considerations, around authorization considerations, around white papers, for instance. So there will be certain requirements as to what needs to be in a white paper to give the proper information to the consumer, who can then make their own reasoned decision. There's also, or there will be also, requirements around market manipulation. So it's these kind of aspects that have been, I suppose, copied to a certain extent from the traditional markets, tweaked a little bit to make them fit for the virtual assets, and then brought into the requirements to try and make a sufficiently robust regime that will allow the benefits, but as far as possible minimize the risks, and essentially the ultimate risk of the consumer's investment. And I think as regulators it's very important, because on the one side we have a role or a mission to maintain the financial stability. We have a role to enable the market to develop, but we also have another role which is extremely important, which is everything that's consumer protection related. So that's why in the text we need to find the balance. And in a way, the message to companies who are looking to embark in this kind of activity is to say, okay, there are benefits, there are gains to be there, there is a potential to increase, customer base or whatever, but there are rules, and you need to play by the rules in order to protect those investors, to protect the consumers, and then have as much benefit as you can.
Thank you, Karen. That was very clear. Thank you very much.
Thank you.
Now let's continue with Denise Voss and to talk about sustainable investment and sustainable finance. Thank you very much.
Thank you, Solenne and Karen, and welcome everyone. It gives me great pleasure to moderate this panel, which is about building bridges between the United States and Europe when it comes to sustainable finance. We're on a sustainable finance journey, and asset managers, financial market participants are all on various stages of that journey. And sometimes that journey is happening at light speed. So it's my pleasure to introduce our panelists who will help us on that journey, to take us through and give us their insights on, again, sustainable finance in Europe and in the United States. So joining me here in Luxembourg is Jenny de Nijs, who is Special Advisor for Sustainable Finance at the Ministry of Finance in Luxembourg, where she is currently the lead on climate, green, and sustainable finance. Joining us from Washington, D.C. is Michael Pedroni, who is the Investment Company Institute's Chief Global Affairs Officer and leads ICI Global, who many of us in Luxembourg know very well. Michael's responsible for ICI's international regulatory and policy work and supporting regulated investment funds and their investors around the globe. So we'll cover 3 topics today. We'll start with a flying tour through sustainable finance and the approach to sustainable finance in Europe and the United States. We'll start with Europe. Jenny, thank you. The floor is yours.
Thank you, Denise. So the sustainable finance approach of the EU is very much driven by its political agenda. And I think the most notable policy that is known for that is the European Green Deal, which was launched in 2020, so just before the COVID crisis. And it basically is a growth strategy for the EU and for the EU's economy. And the main stipulation in that strategy is that the EU should become climate neutral by 2050. And in order to do that, it actually means transforming the entire economy of the EU and decoupling it from the use of resources. Now, in order to do that, you obviously need finance. Finance is the cornerstone of that and the investments that are made in that regard. So finance is extremely important in actually delivering this political objective of the EU. So in order to really put down a framework also of regulations for finance, the EU has come up with the strategy for financing the transition to a sustainable economy, which came out last year in summer, but it actually builds up on the action plan for sustainable growth, which has been already published in 2018 and featured the now infamous taxonomy regulation that a lot of us will have heard about. So this strategy really has 2 different approaches. So on one side, it looks at existing financial services regulations that we already have, and is looking to revise them and integrate sustainability elements within them. So this is for all financial sector industries, such as asset management, banking and insurance, and some notable financial services regulations we might all know is MiFID II or Solvency II. So basically they are being revised. But the other part of that strategy is coming up with new regulations really specifically for almost a new domain that hasn't really existed in finance other than kind of a niche of impact investment or responsible investment over the last 10, 15 years. And I think the most notable regulation of that, already mentioned, is the taxonomy. So this is actually extremely unique in the world. The EU was one of the first to announce this, and it really is it's meant to be a classification system of what does it actually mean to be a sustainable economic activity. So it actually is very complex and very ambitious because it wants to set up almost a catalog linked with scientific indicators of what you could actually quantify as making a positive contribution to sustainable development. Now, this is a work in progress. We've started with the E of ESG, so with environmental objectives. So we have that for now classified. However, the social part is the next big piece that the EU will be working on, and there's a first draft. And obviously that's also very challenging because social aspects are quite hard to quantify, whereas with environmental objectives, you can calculate GHG emissions, for example. So it's a work in progress, but it's really the cornerstone of this regulatory approach of the EU. And it's the basis for other regulations that the EU has either already put in place or is currently working on. And I think the other really important piece of this regulatory framework is the Sustainable Finance Disclosure Regulation. Now, this is also quite unique because very often these types of regulations would be aimed at, let's say, niche actors or impact investment actors. But this piece of legislation is for all financial market participants, whether or not they are focused on sustainable investments or whether just, let's say, a mainstream investor. So under this regulation, they have to disclose to which extent their portfolio is linked to, in this case, the taxonomy. So it's really trying to drive transparency in the market about what is actually really considered sustainable under this taxonomy classification system and what isn't, so that we avoid this whole greenwashing discussion that we've had, especially in the last 5-6 years in the markets. So these are really the most important pieces. There's other things that are being done. For example, there is a corporate sustainability reporting directive, so basically telling companies how they should report also to financial market participants, because it's obviously a chain. There's a green bond standard being discussed. There will be a label for financial products. So there's actually a lot of initiatives. And yeah, it's a work in progress. We can't say that we're finished. But maybe one interesting thing, because if you have heard about the taxonomy, you probably have read in the press quite a political controversy that happened around New Year's Eve, beginning of the year, where the European Commission proposed that nuclear activities and gas activities should be considered sustainable economic activities under the taxonomy. So this caused quite an uproar, not just within member states, because it's a political discussion, but also in the financial markets, where a lot of really big investors said we would never consider nuclear or gas activities as being sustainable within our own investment strategies. So that caused quite a lot of uproar and a lot of letters also being sent to the Commission. And it's a story where we haven't seen the end of yet. Only yesterday, the European Parliament, in two of its committees linked to this work, have voted on a resolution to reject this proposal of the Commission. And it will go to plenary in 2-3 weeks, and it will come back to member states to be voted on. So I think it's a space to be watched, especially considering the Ukraine crisis and looking at getting away from Russian gas, for example. So just to say that even though we're trying to scientifically set up a classification system for sustainable activities through a regulation, there's still a lot of political aspects that kind of flow into that.
Thank you, Jenny. So watch this space. Huh? So there's a lot to unpack there. Michael, could you give us what is the U.S. approach, and how does it contrast and compare to what Jenny's just taken us through? Thank you.
Sure. Thanks to Luxembourg for Finance for inviting me to this, and thanks for those comments. Jenny, I think one of the most important things you said, in addition to all of the other important things, was the political basis for the framework that you have in the EU, and the different starting point in the US in some ways will determine why you get slightly different outcomes in the US versus the EU. So one thing that is important to state right up front is representing, the global asset fund managers. It's absolutely crucial for our members to have reliable, comparable, and consistent data across borders. And so that really is what we're driving towards, is a system where, despite some differences between what you have in the US and in the EU, you do land in a place where corporate issuers are putting out their comparable and consistent data that asset managers can rely on. So that's one important thing to state. I think the second thing to note here is that the US, while it started later on developing its framework, it is moving very quickly. So the Biden administration came in 2 years ago with a stated priority of addressing climate change and sustainable finance. And Gary Gensler, who is President Biden's SEC commissioner, has now proposed a substantial regulatory framework for ESG disclosures here in the United States, both for corporate issuers and for asset managers. So I thought it would be useful to just take a couple of moments to talk through some of the what the US has proposed and then identify where there are similarities and differences. So, the differences in the US and EU approaches can be attributed in part to variances in the regulatory systems that we have, the different legal frameworks, and different historic approaches to capital markets regulation. In the US, the SEC has a legal mandate to protect investors and to facilitate capital formation. And any move to incorporate sustainability into a regulatory framework really has to be connected to that mandate that the SEC has. And that's what the SEC has now done. So what they have done is they've proposed two sets of rules. One set of rules is targeted at corporate issuers. And comments, actually, that is a proposed rule that we're commenting on. Comments are due at the end of this week on that. And then separately, they've proposed a set of rules around asset managers. So similar to what you have in the EU with the CSRD and the SFDR. With the corporate side, what they have proposed is a timeline for implementation being in 2024. They have proposed mandatory Scope 1 and Scope 2 greenhouse gas emissions need to be reported for all companies. So Scope 1 being what you emit as a company, and Scope 2 being what you take in terms of your energy production cost from third companies, from outside companies. And they also require reporting based on recommendations of the Task Force on Financial Disclosures, TCFD. So those are actually very similar to the EU's approach. Now, the difference is that the scope in the US is more targeted than in the EU, both in terms of companies covered and the information to be reported. So the SEC is very much focused on financial risks, whereas the EU is more focused on environmental impacts. And this difference in policy objectives plays out in how you see the proposed rules in the US and the actual rules in the EU taking shape. Another important difference is how the regimes will treat companies outside their jurisdictions. And here, I think, if I had to take a position, I would say that the SEC has at least at an initial level proposed that there be a way to defer to a global baseline for corporate issuer standards, whereas the EU hasn't done that yet. So we are actually actively pushing the EU to recognize, for instance, what we call the ISSB as a global baseline. And then lastly, what I would say is that the SEC at least seems to be taking a better approach in terms of sequencing in the market. So one of the problems for our members, for asset managers, is that under the EU reporting framework, they actually have to begin reporting their exposures, their Scope 1 and 2 exposures, and Scope 3 as well, before that data is even made available by the corporate issuers. So in a sense, what you've done in the EU is you've put the cart before the horse. The investors have to disclose before the issuers have put out or are mandated to put out reliable data. And then lastly, the second set of rules, which I'll cover in much less detail, are around the asset managers. And there, the SEC has just put out two rule proposals, one on fund names and the alignment of fund names and the underlying investments. And then two, if a fund claims to have an ESG mandate, basically what the SEC says is you have to prove it. So show your work, show that that if you are an ESG fund, that you are taking measures to invest in ESG. And so they've set up a category or set of categories for ESG style funds, and you have to meet those requirements under the proposed rule. Final thing I'll say is we do not have a taxonomy in the US, and we don't expect to see a taxonomy here in the US, which is one of the other things that really informs the slightly different approach. I have to give credit to global policymakers that in not having a taxonomy in the US, but generally having a taxonomy in other jurisdictions, I do think they're being very creative about ways to make sure that we can have a minimum set of global disclosure standards that hopefully all jurisdictions can recognize. So I'll stop there. Thank you.
Thank you, Michael. Thank you. Yes, so that's quite encouraging because it's different, obviously, but the way you laid out what the US is doing and obviously thinking about doing is, you could say, obviously getting to the same result, we hope. But you're at even more light speed than we are. But I certainly take your point on the cart before the horse element for the data part. But I'm afraid here in Europe we have no choice but to get on with it. But of course, for global asset managers, global financial market participants, it's about what's happening in the US, it's about what's happening in Europe, and how you deal with both systems, if you will, but also things are happening in Asia as well. So it is a bit of a challenge, again, to be in the financial markets as a participant these days. So, but fortunately, if I understand correctly, there are some opportunities for dialogue and alignment and perhaps standardization. I mean, Michael, you mentioned the ISSB. Maybe you could just spend just a moment just to remind our audience what that is, what's happening there.
Absolutely, yeah. So the ISSB, the International Sustainability Standards Board, was something that was created at COP26, so fairly recently, with the intention of setting a global baseline of standards for ESG reporting. And while they have not yet set what that global baseline will be, we are strong supporters at ICI of the process of setting up that global baseline. So we haven't seen, what's in it yet, but we do know that we're strongly supportive of trying to come up with this system that would allow for interoperability across borders, so that investors don't have to look at one set of disclosures coming out of the EU and another set of disclosures coming out of the US and not be able to kind of compare them at a very basic level. What is nice about the ISSB is that they are taking what we call a building blocks approach. And what that means is that for instance, in the EU, what we would like to see is that the EU recognizes ISSB as the global baseline, but then builds on top of that. So builds in some concepts that are unique in Europe that go further, frankly, than what the US is willing or wanting to do. But by recognizing that global baseline, our hope is that the Securities and Exchange Commission will say that non-US issuers can report under that global baseline that ISSB provides. And similarly, that the EU says non-EU issuers can report under those standards as well.
Okay. Thank you, Michael. Appreciate that. So that's quite encouraging, isn't it? Obviously, a lot of work to do to get there, but quite encouraging. And Jenny, there is an international platform for sustainable finance that is active, and that's about dialogue and other elements. Could you just spend a moment telling us what that is all about? Thank you.
Sure. So basically, after the EU had decided to set up the taxonomy and all this regulatory framework, the EU obviously knew that finance is global. It's not just constricted to the EU continent. So basically, they set up an international platform for sustainable finance, which was supposed to be, or is a platform between different continents in particular, that are developing their own sustainable finance regulations, and in particular kind of definitions and taxonomies. So at the time, obviously, China was quite advanced also in their thinking of how they would classify green activities in particular. So this platform is basically a dialogue platform which really as an outcome wants to find the common baseline between the EU's taxonomy and those of other regions. Now Asia is quite well represented actually. I already mentioned China, but there's also Japan and Singapore and Hong Kong and Indonesia who are there. Then Canada, Norway, Switzerland, and the UK, since they left the EU. They then joined this platform because they also developed their own taxonomy. But actually the US isn't part of it yet. So I think obviously politics played a part as well. When it was set up, we were still under the Trump administration. But Michael said there's a lot of opening also in terms of interest in this topic as well under the Biden administration. So maybe the US could be looking at joining this platform. I think that would be great, not just for the EU, but in general to have a global discussion which would have different outcomes than the ISSB. And I think they could also work in synergy. And I think it'd be interesting to look at that. But on another note, and this is maybe less regulatory driven, But last year, the US joined a network called the Coalition of Finance Ministers for Climate Action, which is actually a network of 72 ministers of finance all over the world. And again, because of the administrations, the US wasn't part of it since the beginning, but they joined it. And Secretary Yellen has been also quite active in it and saying how she would really like to cooperate in sustainable finance with other finance ministers. So it's more linked to what finance ministries can do to kind of guide the transition also of our financial sectors in our countries. So I think there would also be interesting things that could come out of this forum.
Thank you, Jenny. Well, that's quite encouraging as well. And obviously having the finance ministers on board is pretty critical given the amount of investment needed to solve the climate crisis and to meet challenges such as outlined in the United Nations Sustainable Development Goals. So thank you both very much. I just wanted to, we are running out of time, I would say, but I just wanted to maybe add a last point on education and the need for education. I mean, again, if we want investors, we need private money, and private money in the trillions to deal with the climate crisis and the UN goals as well, as I mentioned. So we need private investors. We need all investors to be aware of the possibilities that they can contribute to resolving these issues and invest their savings in these issues, to make these issues happen, if you will. So education is already, financial education is already a challenge. If you look at studies, many studies, most studies, they basically say the level of financial education in Europe, in the US, and most of the world is quite low. And then on top of that, we have sustainable finance education. And so I think there's quite a need for a push for education at the investor level, but also a need for education at the level of the financial market participants, with the policymakers as well, with the media, with and of course, as I said earlier, with investors. So hopefully that call will be heard as well. So I'd like to thank you very much, Michael and Jenny, for giving us a very good summary. It's not an easy topic to condense into 5, 10, 15 minutes, so well done for doing that. And for giving us a good flavor for the approach for sustainable finance from the US and from Europe. And of course, understanding that this will continue to evolve and evolve very quickly. So again, thank you very much. Thank you to our audience. And goodbye.
Thank you very much, Denise, Jenny, and Mackel, for this stimulating and very, very interesting discussion on such an important topic. Ladies and gentlemen, this brings us to the end of today's program. I hope you found it as interesting and, more importantly, as useful as I think it was. If you want any more information, of course, do not forget that our friends from the Investment Fund Association, ALFI, also have regular roadshows to the US. They had one very recently in New York. They also provide interesting information on their website. The same goes, of course, for our friends from the Luxembourg Private Equity Association, as well as all of the service providers. It remains for me to thank all our speakers of today's program and, very importantly, our sponsors. They very generously help us in making this series possible and in improving it. Ladies and gentlemen, I would also like to invite you to take part in our next episode in the Building Bridges series, this time on July 6th, dedicated to the Korean market. Building Bridges with Korea is the next episode. July 6th, early in the morning, Central European time, but you can obviously also always watch the replay. Thank you very much. Stay safe. See you soon and have a lovely summer.